HEG in the quarter gone by has been impacted by several challenges like the weak demand in the steel and auto industry and also the excess supply of graphite electrode by China, leading to lower sales and shrinking of margins. Let's do a three-point analysis of what prospects does HEG hold for investors. 1. What were the Q2 earnings highlights? Well, quarterly sales contracted by 69% year-on-year due to sharp decline in realizations for graphite electrodes and a cutback in graphite electrode production. Now, graphite electrode prices have declined by approximately 60% from what it was prevailing in Q2 FY19. Now, capacity utilization has also reduced to 73% from 85% last year. The combined effect of lower production, lower product prices, and higher raw material prices has actually led to a sharp contraction in the EBITDA margin. On a per ton basis, raw material prices have increased by 53%, implying that the price of key raw material, needle coke, remains quite firm. 2. What are the key observations? Well, demand for graphite electrodes in the steel industry has been sluggish for the last 1 year on account of a global growth slowdown, weakness in demand for the auto sector, as well as that has especially affected the steel offtake as well. Additionally, trade tensions between the US as well as China have also distorted the demand-supply situation for steel. Interestingly, now while global production, excluding China, of steel has actually decreased by 2.9% in Q3 of CY 2019, Chinese production has increased by 5.2% year-on-year, leading to higher supplies in the rest of the world. Now, globally, due to lower steel production and demand, there has been a steep cut in the demand for electrodes, hurting graphite electrode prices. An additional drag for the domestic market has also been the higher supply of the non-UHP or the ultra-high power graphite electrodes from China. HEG and Graphite India are definitely facing intense competition from global graphite electrode manufacturers, as well as which, along with the elevated inventory in the system, has also kept the graphite electrode prices quite weak. Now, along with this, the removal of anti-dumping duty on graphite electrodes in India in September 2018 has actually led to higher imports. 3. What's the outlook going forward? Well, graphite electrode companies are past their supernormal profit phase. FY19 marked the peak of sales and EBITDA margins for HEG. Now, companies benefited in the previous 3 fiscal years due to a positive economic growth outlook, supply deficit of graphite electrodes as well. Now, as far as UHP grade graphite electrode is concerned, inventory destocking is expected to get completed by the end of H1 2020, which should definitely help in supply-demand situation to revert to balance now. Given the medium-term headwinds in the demand for graphite electrodes, we don't see a case for any sharp re-rating in the stock. However, the stock is definitely trading below the book value and at an attractive valuation multiple of 4.5 times FY21 estimated earnings, along with a dividend yield of 7.9%. Now, the low valuation also makes it an accumulation pick for the long term, and investors can definitely look for a staggered buying opportunity over the next 3 to 6 months.